Hello everybody, this is a nice success story from our last Forex cohort that started in March of this year. This is trader Michael trading from the UK, and he had a very big R multiple day last week, Wednesday. He had a fantastic day of 33 R, more than 33, taking 8 trades. Well, the weeks before he had an 11-hour week. The week before that week he had a 14-hour week. So these are the weeks where we started to trade the live market. So in total for this month he's at 58 hour. So let's have a look how that went. Michael is a novice trader. He's very young. He's 17 years old, and he goes to school. So he trades before going to school 3 days per week, 1 or 1.5 hours per day. Well, you can read through his commentary. Well, let's have a look at the trades he took. So this is a CAD yen based on the S2 strategy long on the 1 minute chart. He actually was trading 3 time frames higher. This is 1 minute, 5 minute, 15 minute, and this is the 60-minute chart, and these are above 60-minute charts, the time frames. So we was actually trading this charting situation. We have 3 stop run levels. The 200 is the stop run level, so whenever price gets there and beyond, we can see a quick move higher. So this is a level, this is level, and he was getting in 3 time frames lower based on a very low risk idea. This is pattern 2. The stop goes here. This is how it develops. So that was the first trade of his week. We can see here 3 times higher how it actually made a stop run move, spike of 200 and taking out the prior high, and then he got out here. Well, he had to go to bed, so he took profit, and this was a more than 4-hour result. Well, fantastic for a first trade of the week, where the weekly target is getting to minimum 2 hours. Now this is the next series of trades he took. That's a pyramid based on the pound US currency pair. The pyramid totals more than 16 hours. Now let's have a look at it. This is a short pattern, again based on S2, well this time on a 5-minute chart, and here the interesting chart is actually 4 time frames higher here. This is a stop run level. It has just been tested, and should it fall through, well, it falls to the next level, the 200 moving average that acts as a magnet. There's nothing in the way, so there's free fall territory. So this is basically the potential there is when he's choosing a low risk idea here on the 5-minute. The 2 time frames higher, they fulfill the rule, so there's a lot of potential to this trade. And now this is the scale in. Now he builds a pyramid, right? This time based on the S1 strategy on the 1-minute chart. So he drops 1 time frame, and that has resulted in a 9-hour result, right? This trade. Let's have a look at it. Well, this is the S1 pattern, breakout failure, very tight stop. And basically building, right? Building on the pattern. This is the first one, the S2, and now he's adding up with an S1 pattern in 1 time frame lower. Well, still the same thing is true, right? On this time frame, 4 time frames higher now, and now this is another scale in, the third trade for the pyramid, and S2 again on the 1 minute. So this was the last 1 minute here. It develops nicely, already well into profit, and he adds on with an S2. Well, the stop gets united here. That's what we do when we pyramid. Stop gets united, so you capture a big portion of your last trade should you get stopped out. And now we've got a 3 trade pyramid, and we're basically capitalizing on this stop run move here. And well, by the end of the day, when he had to go to bed, well, he took profit and he reaped a really nice result. Well, he had another pyramid. Let's not go too much into detail here, but there was another pound CAD pyramid and a few more trades. And on Friday, well, he actually ended the week with more than 33 hours, as he had a trade or two on Friday as well. So this is it. Should just give you an idea how we trade the markets, how we're looking for low risk ideas, and how you can capitalize on these higher time frames and stop run moves by building pyramids on different time frames. So really well done here.